Financial crime is big trouble and with the potential of destroying the nations and the nations of Africa. So today we'll be looking at one of the most crucial discussions or one of the most crucial topic that has been affecting Africa and is still affecting us today, both individually, in our businesses, and the economy of Africa. So I'll be coming up very shortly with a very unique topic that is titled Financial Crime Compliance in Africa. And we're going to look at how financial crime compliance works. My name is Professor Paul Aliu Kamara. This is a courtesy of our article written by myself, Professor Paul Aliu, and edited by Professor Rudolph in the Rudolph Kwano University in Liberia. You can get us at Rudolph Kwano University in Liberia, or you go to www.rkulib.org, which is our website in the university. So let's look at a few things this hour. We're going to talk about financial crime compliance and with many other things. So the question has always been, what is financial crime and how financial crime affects Africa? So this is a guide to counter financial crime in risk management or risk and base risk management. Now, financial crime has emerged as one of the most pressing Africa challenges today. Interconnected economies, from money laundering to cyber-enabled fraud. These crimes pose severe threats to the financial sector's integrity, business sustainability, and government ability to regulate effectively. So this program is designed to provide an in-depth understanding of financial crime compliance in Africa and its significance and its role in safeguarding financial institutions. So let us begin by looking at some of the questions. Like I said, question number one is to address financial crime. So the question is, what is financial crime compliance in Africa? That is FCCIA. So financial crime compliance refers to one, the policies, the framework, and operational measures implemented by financial institutions and organizations to one, identify, two, manage, and three, mitigate risk associated with financial crimes. So how does this crime detected and how can these activities how can these activities seem to be interrelated? These crimes includes activities such as money laundering, terrorism financing, fraud, corruption, bribery, tax evasion, and sanctions violations. So when we talk about the FCCIA, we talk about FCC ensures that business adhere to legal, regulatory, and ethical standards designed to prevent and detect unlawful activities. So let's look at core enabling financial crime institutions requirement. Number one, we're talking about meeting regulatory requirement. Why? If you are to meet regulatory requirement, is to avoid penalties and reputational damage. Because most often times our institutions are under reputational threat, which at times undermines the turnover of our business or business of financial income. Number two, we talk about safeguarding their operations. which is against criminal exploitation. So we safeguard our operation against criminal exploitations. Number three, we talk about protect customer and stakeholders from financial and reputational harm. So this scope of financial crime prevention in Africa typically encompasses anti-money laundering, measures which we call the AML, Now, which we call the AML. Another thing we are looking at is the KYC, which is Know Your Customers Protocol. We call it the Know Your Customers Protocol, and that is very, very important. And another thing we'll be looking at again, sanction compliance transaction monitoring. Sanctions, compliance, transaction monitoring, and more. It's an ongoing multifaceted discipline that requires consistent vigilance, innovation, and proactive approaches. The next question we'll be looking at is why financial crime compliance so crucial for financial institutions. Why financial crime compliance is so crucial for financial crime institutions. Financial crime or financial service sector is a frequent target for criminals seeking to explore its system for illicit gains. Without a robust compliance framework, financial institutions are faced with multiple risk factors. And what are these risk factors? Number one is regulatory penalty and fines. Regulatory penalty and fines. Now, regulatory authorities worldwide are increasingly strict about non-compliance. Institutions that fail to meet their obligations risk what we call significant financial penalty and legal actions. Number two, reputational damage. When you have a reputational damage, one of the things that happen is you lost trust. So we talk about trust is the cornerstone of financial service industry. Association with financial crime can severely damage a firm's reputation, and then it can erode the customer and investors' confidence on that company. Number three, we talk about operational risk. So when we talk about operational risk, we're talking about financial crime often lead to operational disruptions requiring costly remediation effort that divert resources from core business function into salvaging repetition problem. So the number four thing that we talk about is global security implications. It has global security implications. So financial institution plays a critical role in the broader fight against organized crime and terrorism. So non-compliance undermines global efforts to disrupt criminals' network and safeguard economic stability. So by implementing effective financial crime compliance in the African continent is one of the strategies financial institutions not only comply with the law but also enhances their resilience against emerging threats, promote customer trust, and contribute to the integrity of global financial system. And another thing we're looking at also, we're looking at financial crime trend and their global impact. We're looking at financial crime trend and their global impact. Now, when we're talking about financial crime trend, we look at the recent landscape of financial crime that involves significantly. So in recent years, the landscape of financial crime has evolved significantly influenced by advancement in technology, and then the globalization of financial system and shifting regulatory priority. So let's look at some of the risks that are in these categories. Number one, we're talking about risk in cyber enabling financial crime. Risk in cyber enabling financial crime. Now, cyber crime, including ransomware, phishing scheme, and identity theft, has surged as criminal exploit digital vulnerability. These activities often intercept with traditional financial crime such as fraud and money laundering. Number two, increasing regulatory scrutiny. Increasing regulatory scrutiny. Now, government and regulators worldwide are introducing stringent requirements such as beneficial ownership, transparencies, and enhanced sanctions regimes. This has created new compliance challenges for institutions operating across jurisprudence. Another thing we're looking at, we talk about growth, cryptocurrencies, and DeFi. Growth of cryptocurrencies and DeFi. Now, while cryptocurrencies and decentralized finance, which is called the DeFi, offered innovation, they also present opportunity for money laundering and sanction evasions. Regulators are racing to establish frameworks to address this risk. Number four, global financial integrity or global financial integration. As cross-border transactions increases, so does the complexity of compliance. Institutions must navigate a patchwork of national and international regulations while addressing multiple jurisdictions risk. Number five, we talk about sophistication of financial crime, sophistication of financial criminals. Now, criminals are using advanced technology like artificial intelligence and blockchain to evade detections. This raises the bar for institutions to adopt equally sophisticated compliance tools strategy. Now let's look at some of the global impact. Some of the global impact. Global impact. Financial crime has far-reaching consequences for undermining economic development to enabling corruption and financing terrorism. It estimated costs run into trillion annually. Of course, you know when we talk about trillion, this is not small money at all. Talk about trillions annually, affecting businesses, government, and individuals alike, strengthening the financial crime compliance in Africa. So, strengthening financial crime in Africa is critical to curbing this impact, ensuring market integrity, and fostering trust in financial crime. By understanding this essence of financial crime compliance in Africa, the challenges seeks to address organizations. So, by understanding the essence of financial crime compliance in Africa and the challenges it seeks to address, organizations can better position themselves to navigate this complex yet vital area. So, subsequent actions of this guide will delve deeply into the component, solution, and best practice that underpin financial compliance. So, as we go on our discussions, we need to ask ourselves some questions And the question is simple: what is financial crime? There's been this talk about financial crime here and there, and many are giving it or attaching or labeling it into different fashions. So I would like us to look at a simple definition of financial crime. Financial crime is referred to as a wide range of illegal activities that exploit financial system for unlawful gain. We'll call it theft, criminal activities. And in some definition, it's a criminal activity for personal gain. So these activities involve what we refer to as one, manipulation; two, abuse; three, illegal access of financial institution; four, market and systems, often with significant economic, social, and ethical implications. At its core, financial crime is motivated by the desire to obtain financial benefit or facilitate illicit activities. It's often cross-border, making it a complex global issue that demands a coordinated response from financial institution, government, and regulatory body. Now, financial crime encompasses any illegal acts that involve deception, theft, or manipulation of financial system. These crimes are often committed to conceal illicit funds, evade tax, or finance other illegal activities such as terrorism or corruption. The Financial Action Task Force, which is called the FAC, broadly define financial crime as action that impact the integrity of the financial system, undermining confidence in institutions, and disrupt the global economy. So quickly, we'll be looking at types of financial crime. Types of financial crime, and we'll close here. Then tomorrow, we'll be looking at some of them. Types of financial crime. Financial crime encompasses a broader range or broader spectrum of illegal activities aimed at stealing, defrauding, or otherwise misusing financial resources. Now, this crime not only cause financial loss or losses, but also erode trust in institutions, distort market, and invest and has severe cases, destabilizes society. So we'll be looking at a few of them. One is money laundering. Money laundering is the process of disguising the origin of illegal obtained funds, so they appear legitimate or legitimately. It is a criminal issue because it allows criminals to profit from their illicit activity without fear of detection. Now, what are some of the stages of financial crime or money laundering rather? Number one is called placement. We have three layers. We have placement, layering, and integration. Now, let's talk about placement. This is the initial stage where the dirty money enters the financial system. For instance, a criminal might deposit large sum of cash into a bank to convert it into other assets such as precious metal, estate, etc. The next thing we talk about is layering. At this stage, the focus is on obscuring the trail of the funds. Criminals engage in complex financial transactions such as transferring money through multiple of accounts, investing in offshore companies, or buying or selling high-value items. Number three, we're talking about integration. Now, one of the Once the money has been claimed, it is reintroduced into the economy as though it were earned legitimately. So this could involve purchasing like real estate, luxurious goods, or even legitimate business. So let me give you a few examples before we close on this. Now, establishing shell companies that appear to operate legitimately but serve only to the launder or that but serve only to launder money. Now, number two is purchasing property or asset that's selling them to make the source of money or funds. Number three, trade-based money laundering, where fraudulent invoices are used to move money internationally from one place to another. So the fight against money laundering is complex and ongoing, with governments worldwide implementing stringent and anti-money laundering regulations. So let's treat last one. I can't treat all because of time. We treat fraud. Many people are talking about fraud, but what is fraud? If I talk about fraud, what am I referring to? What is actually the definition of fraud? Fraud is involved intentional deceit or deception for personal or financial gain. It is one of the most pervasive financial crime and can affect individual, business, and government alike. Now let's look at the types of fraud as we close. 1. Identity fraud. 2. Investment fraud. 3. Credit card fraud. There are many more, but we'll be dealing with this one. Now, when we talk about identity fraud, what are we referring to? Criminals steal personal information from you. This is a warning for those of you who are in the social media. Don't let out your information to the public without, particularly your biodata, your date of birth, your nationality. This is something that is easily stolen, which we call fish. They can fish them and turn them to personal information against you without knowing. So what the criminal does is they steal personal information such as your national insurance number or bank detail to commit fraud in someone else's name. So this can lead to unauthorized loans, credit card charges, or even false tax or false claim, probably. I don't know if that's what they did to me, because the one teaching here, I've also gone through that. My card was used and be paying on Facebook until I lost almost about 11,000 leons as we're still investigating. So these are common things. They are common things. So number two, we talk about investment fraud. This includes schemes like the Ponzi, they call it the Ponzi or pyramid scheme. We had a case in my country, I don't know on your own or whatever, when a company come in and they receive a lot of money from people. They are taking from one person and give to the other, and without the company itself realizing our own funds. So it's called a Ponzi scheme or called pyramid scheme, where investors are loyal or allow with promises of high return, but ultimately lost their money. Number three, we call it credit fraud. So credit fraud is when criminal use the stole credit card information to make unauthorized purchases, often targeting online retailers. So what are some of the impact? Fraud is not only resulting in significant financial loss, but also undermine trust in financial institutions. Victims often face stress, reputational damage, and time-consuming recovery, which is very, very important. So governments, business, always involved heavily in fraud detection technology, but as criminals become more sophisticated, the risk continues. So we're going to stop this teaching for today, and we're going to look at corruption and bribery and other aspects in our next teaching. So I thank you for being part of this. I've been your host, My name is Professor Paul Aliu Kamara, a professor of leadership and organizational development specializing in financial crime. Thank you so much.